Hello, welcome to lecture 17 of the Fiat Standard online course. Today's lecture's topic is a Bitcoin cost-benefit analysis. So in chapter 12, we performed the cost-benefit analysis for the fiat system. And in this chapter, we're going to do the same for the Bitcoin monetary system. So to begin with, I think it's important to emphasize really a pivotal point in understanding Bitcoin, which I've come to observe over years of listening to and watching fiat economists discuss Bitcoin. And it is the idea that fiat economists, because they come from a fiat background wherein knowledge and information and theories and facts are determined from the top down. You know, they're passed down by fiat. So the fiat agenda, the fiat money, the fiat central bank determines what is correct, what is true, and what is legitimate. And then that is passed down to research agendas, to economists, who then popularize it to university students and to magazine readers and newspaper readers. And that's how knowledge is imposed. And so from this perspective, you see how, you can see it reflected in all kinds of sciences, not just in economics and everything. It's top down. The ideas of what constitutes any kind of legitimate information comes from the top, and it's determined by financing, essentially, by central bank financing, particularly in the field of economics. You can't get published in mainstream economics journals if you question the existence of a central bank, because the central bank is what determines this agenda. And this isn't some nefarious conspiracy. It's just the research agenda starts from the starting point of what should the central bank do. And so if your conclusion is, well, the central bank shouldn't exist, there's not much point for the central bank to finance you, because they're not going to finance study that says that they shouldn't exist. It's not something they can do. It's not their agenda to discuss whether they should exist or not. They're not in the business of asking existential questions. They're in the business of figuring out what the best course of action for them to follow is. So for fiat economists, reality is determined by fiat. And so in fiat textbooks, government creates money. And so non-governmental money simply cannot work. That's, I think, the main impediment that fiat people have toward understanding Bitcoin, is that in their mind, fiat money just cannot work. Non-fiat money cannot work, because, without government, how could we have money? How could we agree? And what if I want to use seashells as money and somebody else wants to use desks as money? How can we trade? Well, if we have a benevolent government, the government tells us, no, you can't use seashells, you can't use desks, and let's just use our credit. And then that allows us all to trade with one another. In their world, reality is imposed from fiat and money is imposed by fiat. So non-fiat money just simply cannot work. But in reality, of course, it works. Now, a real economist would try to understand what it is that makes an economic phenomena happen. Why is it that people behave in a certain way? This is, I think, the rational thing for an economist to do. Look at why people behave in a certain way and try and understand the rationality of their actions. Why do they freely choose to act in that particular way? But for non-fiat economists, that's the rational thing to do. But for fiat economists, no. You see this in many fields of economics, where the economist puts themselves in a position where they are trying to explain to the world why the world is wrong. And they're trying to explain to people why their actions are wrong, why you shouldn't be doing this thing that you're doing. And here are my theories that explain to you why reality is wrong and why you shouldn't doing them. And so in their world, Bitcoin shouldn't work because it doesn't fit their theories. And that's the end of it. But in the real world, Bitcoin works. And it works because people continue to use it, and it continues to operate and continues to grow every year, and it continues to get more secure, and it continues to gain more and more users. So let's, instead of trying to use the fiat approach of trying to impose on people what they should think about Bitcoin, let's try and understand the logic of why Bitcoin works. And that's the point of this chapter. So let's perform a cost-benefit analysis. Let's see what are the costs of running Bitcoin and what are the benefits of running Bitcoin. So the costs of Bitcoin are primarily in terms of electricity. That's the main thing. Bitcoin difficulty and block time gives us a very good idea of the hash rate on the network. Bitcoin machines have clear specifications of their electricity consumption and hash output. And by making assumptions about the composition of the machines on the network, we can get a good idea of the hash rate that is on the network. And at the time of writing, Bitcoin consumed around 100 to 150 terawatt hour per year. And that is a lot. Make no mistake about it, that is a lot of electricity. It's not a small amount of electricity. It's a huge amount of electricity. As we discussed in the previous chapter, there's no way of sugarcoating this. It's a lot of electricity, but the sugarcoating, or the reality is, well, there's no sugarcoating because sugar is bad. But the reality is that it is a lot of electricity, and that is because it is worth it. Because as we discussed in chapter 16, first of all, this is almost all electricity that is cheaper than international prices for electricity. So the average cost of electricity in the world is around 14 cents per kilowatt hour. The majority of Bitcoin electricity is around 2 to 5 cents per kilowatt hour. And right now, as I'm recording this is November 2022, 1 year after the publication of the Fiat Standard. The price of Bitcoin is around $16,000, and the difficulty for Bitcoin has been shooting up. And so Bitcoin is enormously competitive. So many miners are going out of business. Only the most efficient miners are still in business. And that's why only the ones that have the cheapest costs for electricity are able to stay in this business. So this current bear market, since the book has been written, has probably even wiped out miners who are mining at 6 or 7 cents per kilowatt hour. I know miners who have that electricity cost and they can no longer keep their mining machines running anymore. That's half of the average electricity cost worldwide. So even if you're mining, even if you have extremely cheap electricity, less than half of the global average, you are still not able to mine competitively on the Bitcoin network right now, and you're getting likely wiped out. So at around 100 to 150 terawatt hours over the year of 2021, and at an electricity cost of around 2 to 5 cents per kilowatt hour, we're talking about a electricity consumption of around $2 to $6 billion per year. That's the amount of electricity. That's the cost of the electricity that went into mining Bitcoin. $2 to $6 billion worth of electricity, I think, is a reasonable estimate of how much electricity has gone into Bitcoin. So that's the cost of electricity. Now moving on to the security cost. The overall security cost of Bitcoin is not just electricity. You also need to secure the mining facility, the mining equipment, and the facilities that are needed to make those miners run. Bitcoin mining is very competitive. Some miners make a profit because their cost is lower than the average cost. Some make a loss because their cost is higher. Those whose cost is higher get eliminated, and those whose cost is lower will have difficulty adjustment rise to raise their costs eventually. So if you're mining at a significant deviation from the average cost of mining, or if you're mining at a significant deviation from the value of the block reward, then that deviation is likely going to get wiped out one way or the other. So if your cost of mining is much higher than the block reward, then you are likely going to go out of business because you're not going to be profitable. And if your cost of mining is much lower than the block reward, then you are likely going to either you're going to expand your business and raise your mining costs because you will use less efficient sources of electricity, or you will witness the more and more people enter into the business at a lower cost, and that will lead to the difficulty rising, and then that will cause your profitability to disappear. So overall, we can say that the total cost for mining is roughly in the range of the total rewards from the network. The network is handing out rewards for mining Bitcoin. Every 10 minutes, there's a new block, currently with about 6.25 Bitcoin being handed out in rewards for miners every 10 minutes. And that, I would believe, is roughly equivalent to the total amount of resources that are being spent by miners on mining. If miners were spending a lot less than that, then as I said, more money will be spent in order to secure the profits, and that would eliminate the profits. And they were spending a lot more, then the opposite would happen. If they keep spending more, then a lot of miners would go out of business until the cost drops. So I think the value of the mining reward is a good estimate of the total amount of cost for the process of mining. So the total amount of mining reward handed to miners from the network inception until July 2021 is about $29.4 billion. That can approximately count as the total cost that miners have spent. Again, some have spent less, some have spent more than the average, but this is a good indicator of the average cost that miners have incurred throughout their time. So Bitcoin has cost people around $30 billion to run up until July 2021. So until July 2021, likely miners have spent around $30 billion in order to make Bitcoin possible.
The Bitcoin Standard Podcast is brought to you by thesafehouse.com, my independent publisher and bookshop, selling the best Bitcoin books in high-quality cloth hardcovers built to last for generations. Most books these days are pretty fiat. They're flimsy and they fall apart quickly, and I did not want that for my books, so I set up the Safe House especially to provide you with beautiful, long-lasting classic cloth hardcovers you can proudly pass down for generations. You can get copies of my 3 books, The Bitcoin Standard, The Fiat Standard, and Principles of Economics, and you can also get copies of Lynn Alden's Broken Money, Parker Lewis's Gradually Then Suddenly, and Matthew Lysiak's Fiat Food, to which I contributed a few chapters, and Mexican billionaires Ricardo Salinas Pliego's new book, The Bitcoin Enlightenment. We now offer bulk discounts so you can buy books for yourself and for the friends and family you'd like to learn about Bitcoin. Buy any 2 books for $50, any 5 books or more for $20 per book, and for more than 50 books, it's only $15 per book. Go to thesafehouse.com, the SAIF house.com, where you can get all of these books in high-quality cloth hardcovers, delivered worldwide, and get 10% off for paying with Bitcoin.
With fiat money constantly debasing, preserving your wealth isn't an option or luxury. It's a financial and moral imperative. If you're familiar with my work, you know the only financial advice I ever give is to buy and hold Bitcoin for the long term. This has never failed anyone. If you want to buy Bitcoin, I strongly recommend using Swan, a group of hardcore Bitcoiners laser focused on making Bitcoin easily accessible. While most scramble to react to each new crisis, Swan private clients are already positioned in the only monetary asset with absolute scarcity, Bitcoin. Swan Private partners with families and institutions who share a principled conviction in Bitcoin as the foundation for multi-generational wealth. With concierge service, deep expertise, and uncompromising security, the Swan team helps clients exit the crumbling fiat system and secure their future in sound money. Today, Swan Private serves more than 5,000 high net worth clients who have purchased more than $4.5 billion of Bitcoin and put it into cold storage. If you're ready to move beyond the false promises of fiat, start your long-term Bitcoin strategy at swan.com/safe, SAIF. Now, the benefits of Bitcoin are, number one, it has given us secure savings. Thanks to Bitcoin, we're able to save, and these savings are secure from inflation and secure from theft and secure from being confiscated and robbed. So Bitcoin takes electricity and hardware as inputs and produces savings protected from inflation and fraud. Its efficiency as a saving mechanism is to measure the cost of building it and compare it to the monetary value stored in it. The cost of building and securing Bitcoin is the total mining reward, which, as we said, has so far been close to the mining subsidy, which is the sum of daily reward times the daily price. Whereas the monetary value that is stored in Bitcoin is equal to the market capitalization of Bitcoin, which is equal to the Bitcoin in circulation multiplied by the Bitcoin price. So this, I think, is a good, useful way of thinking about the benefits of Bitcoin. It's cost us the sum of the daily mining reward times the price at which that reward has been handed out, and it's given us the market cap of Bitcoin. So let's compare these. In November 2022, now measuring them now, updated numbers compared to the book. The book has the numbers up until July 2021. The price then was higher. So then, back then in the book, you'll see the number was around, I think, $1 trillion of savings or $800 billion of savings. Now it's around $300 billion of savings. But the security cost is around $35 billion. When the book was written, is around $30 billion. So around $30 billion to $35 billion of resources have produced around $400 billion of savings, or $300 to $400 billion of savings. This is, I really think, the kind of objective way of measuring the cost benefits of Bitcoin. We have people who are holding $400 billion worth of Bitcoin worldwide. They value them at $400 billion or $300 to $400 billion, depending on the price. They value them at that value because that's how much they are willing to sacrifice an opportunity cost in order to hold on to Bitcoin. So the people who are holding on to Bitcoin right now clearly value it at a value that is higher than the current market price of the Bitcoin, because if they valued it at less than that, then they would be selling it. And then the cost of producing this has roughly been in the range of about $35 billion. So overall, I think we could say that it's given us a 10x return. So we've got around $350 billion of savings produced from about $35 billion of investment in the production of Bitcoin and the security of Bitcoin. So the quote from the book was, with data from 2021, is that the total value secured by the network in July 2021 is in the range of $800 billion, while the total cost of securing the network is the $30 billion. That is the sum of the total mining rewards, calculating by summing the market value of daily rewards. At the margin, Bitcoin's efficiency can be measured as the annual cost of maintaining Bitcoin compared to the value secured. If you wanted to measure it annually at the margin, then right now, in order to secure the current $400 billion, we are paying the annual mining reward over the last 1 year. You could think of it as as a yearly margin. So this year, in order to secure the $400 billion of savings that we have in Bitcoin right now, or around 350, we've got around, we're spending around, I'd say, about $5 billion of saving. And so every year, that efficiency increases because the value of the network tends to increase over time, and the value of the reward declines as a percentage of the network because the stock to flow ratio declines. So the new production declines as a percentage of the total reward. So at the margin, measured yearly, we can think of the efficiency of Bitcoin for savings as the amount of money spent securing Bitcoin in a year compared to the value that it secures. So currently, the block reward, the total amount of reward that miners get from mining Bitcoin, is equal to the block subsidy plus the transaction fees. And the block subsidy is currently at around 6.25 Bitcoin. The transaction fees have so far been a small fraction of that. So they're a small fraction of the total subsidy. So the block reward has been equal to roughly the block subsidy, the new amount of blocks that is being produced. So what this means is that effectively the efficiency of Bitcoin is quite similar to the stock to flow ratio, which we discuss in depth in the Bitcoin Standard. In other words, we can think of the stock to flow as a measure of monetary efficiency. The higher the stock to flow, the more the stockpile of money that exists compared to the new money that is being produced. And in the case of Bitcoin, because the new money that is being produced is what is financing the miners, we can think of that as the security cost, as the cost of operating Bitcoin, as the cost of making sure that Bitcoin runs and operates safely. So as the monetary efficiency rises, the value stored in Bitcoin rises because Bitcoin becomes more efficient as a mechanism for storing value. As the stock to flow rises, as the value of the money going into Bitcoin increases, those things are related. In other words, when the value held in Bitcoin increases compared to the new value that is being produced and handed out to miners every day, Bitcoin becomes more efficient as a form of money. It costs us less as a percentage of the total value to secure Bitcoin because the stock to flow is declining. In other words, the new production of Bitcoin is declining as a percentage of the value that is secured on the network. That's why we can think of the stock to flow as being effectively like the efficiency of a monetary instrument. So thinking that's how we think about it in terms of the on the margin. But thinking in the aggregate, we can measure the economic cost of producing new Bitcoins and compare it to the market value of Bitcoin in circulation today. And that is, so far, of course, it's similar because the transaction costs have been similar, have been negligible. So the total cost of the value of the new coins that are being produced when on the day that they were produced is about $27 billion. So the value of producing the Bitcoin was $27 billion. And in July 2021, they were worth about $620 billion when this was written. So this is a 2,200% return. So the average Bitcoin has appreciated around 23-fold since its creation. This is another good way of thinking of the efficiency of it, that the cost of producing a Bitcoin, we can measure it from the price of a Bitcoin at the day at which it was produced, and then we can compare it to the price of those Bitcoins today. And we see the significant appreciation in all of these. In overall, of course, the last Bitcoins that were produced over the last year, they've depreciated. They're cheaper now than they were produced, but overall, the total value of the Bitcoins today is much higher than the value of the Bitcoins when they were produced. But then we can also think about the efficiency of Bitcoin as a global money transfer technology. Bitcoin is a mechanism of transferring money across the world. And currently, transaction fees are roughly equal to 0.02% of transaction value. And you can see the graph that shows the historical evolution of this over time in the chapter. Currently, we're only paying about 0.02% of transaction value. This percentage has been rising as the Bitcoin subsidy declines. Trend is likely to continue because if people value Bitcoin, they will value owning it and transacting with it. But the block space is fixed. So if you look at this graph, figure 21 in the book, you see that, look at this black line, which is the fees share of the reward. We see that it has been in an uptrend since the beginning. As the value of Bitcoin increases and as the value of the money that is held on the network increases, the percentage of the network that is in fees also increases. And so we see this upward sloping trend line where the fees continue to become a slightly more expensive part of the value of the transaction, but they're still at around 0.02% of transaction value. And this percentage has been rising as the Bitcoin subsidy declines, and I think this trend is likely to continue. And this is one of the common objections we hear about Bitcoin. So some economists will say, well, the block subsidy is declining, and when the block subsidy declines, then there's not going to be a way to secure Bitcoin. And because miners are not going to get paid enough incentive to secure Bitcoin. And I think this is a completely backwards and wrong way of thinking about Bitcoin security. And it's a wrong way of thinking about economics because it assumes that there needs to be a fixed security budget for Bitcoin to work, and it doesn't quite understand that it's a subjective thing, and it's not a matter of having a fixed security budget. It's a matter of the miners being able to mine successfully without being attacked. So it's a dynamic thing, and it's about people being willing to pay whatever it takes in order to get their transactions to clear. And this is really the key thing that explains it. In order to see whether Bitcoin can work as a way of making transactions, it needs to have people demand it. And this is the ridiculous aspect of it, that if people value Bitcoin transactions, then entrepreneurs will find a way of providing them the transactions. I mean, it's just the way that the technology works is that it allows for a market in these uncensorable transactions to emerge. And it allows the people who want those transactions to pay transaction fees, and it allows for the miners to make money from selling these transactions. And so because mining is an open market and because anybody can join it, then that ultimately is what determines the security of Bitcoin. That's what ultimately allows people to use Bitcoin securely, even if there is an attempt to try and censor it. Because you can, if you're a miner, or if you control some miners, or if you're a government that controls miners, you can stop them from mining any particular transactions. But you can't stop other miners from mining those transactions. And so as long as others can pay for it, then they will find a way. So will there be enough demand to make the transactions go through? That's a question that boils down to, will there be enough demand for Bitcoin? If people want to use Bitcoin, they will pay whatever it takes in order to make it work. That's what the technology allows us. It allows them to pay the miners enough to make the transaction goes through. There's no conceivable scenario in which people demand Bitcoin but do not demand Bitcoin block space. That's really, I think, the key point. If demand exists for block space, then transaction fees will be paid to facilitate this. If demand doesn't exist for block fees, then demand doesn't exist for Bitcoin. Bitcoin allows for that market in block space to emerge, and people can just pay to clear their transactions. There's no fixed security budget that you need in order for your transaction to clear. It's a market. There's a fixed amount of block space, and if you want to get into it, you're going to have to pay enough to get your transaction into that block. So currently, each block contains around 1 megabyte of data, and a miner is paid around $100,000 to produce it. So the current value of each Bitcoin block is around $100,000. It's 6 Bitcoin. And 6.25 Bitcoin, and each Bitcoin currently is around $17,000. So that's around $100,000 of mining reward that goes to each block miner. So 1 megabyte of data is currently worth $100,000. This is how much people value putting data on the next Bitcoin blockchain. So 900 Bitcoin are produced each day and devalue the existing supply in order to finance the mining. But people are paying for that mining. Currently, miners get paid through the subsidy, devaluing the existing coins. But as that disappears, they'll get paid from the transaction fees. So whatever it is going to take for them to make the transaction clear, it's an option available for people to pay for it. And so for me, this discussion about whether there will be enough block space, where there will be enough mining reward in order to keep Bitcoin operating, I think is hugely misplaced, because if demand for Bitcoin exists and if people are interested in operating Bitcoin, then they're going to pay for it. And on some level, it's like saying, well, what if people don't want to use Bitcoin? Yeah. If people don't want to use Bitcoin, then yeah, Bitcoin falls apart and it stops working. That's always the case. And it's true for Bitcoin. It's true for everything else. If people stop using computers, then yeah, the market for computers will be destroyed. But if people want to use computers, then they'll find a way to pay people who know how to make computers to produce the computers. And in the case of Bitcoin, it's even more robust than just computers, because governments might be able to ban the production of computers and the distribution and sale of computers, and they'll be much more successful, I think, in banning computer production and sales than they would be in banning Bitcoin mining and sales, because Bitcoin is much easier to produce and sell. You just need, you do need computers to produce Bitcoin, but once you have computers, it's much harder to ban Bitcoin, I think, than just banning computing overall. Probably. Well, I don't know. So probably a complicated question, but ultimately, I guess the distinction is that with Bitcoin, the point I'm trying to make is that with Bitcoin, there's no mechanism for stopping people from mining Bitcoin. They'll always find a way to mine. So in conclusion, I'd say there's no fixed security fee that needs to be paid to make Bitcoin operate. The mining needs to be expensive enough to allow spending to happen securely without double spends and long reorg attacks. That's what needs to happen. And it's just, if we find that mining isn't happening because there are a lot of double spending transactions, or as mining is happening, there are a lot of double spending transactions, a lot of long reorg attacks, then it's going to cost you more to get your transaction through. So Bitcoin transaction fees will rise. But if people want those transaction fees, then they will, people want their transactions through, then they will find a way. And I think the demand for Bitcoin as hard money is what's going to drive the demand for this. So should such attacks become a problem for Bitcoin users, this will incentivize them to pay transaction fees to get their transactions confirmed, and fees will rise. What the level of fees will be, I don't believe we can tell a priori. I think it's just something that will be determined on a market. Now, should higher fees be needed, we have evidence to suggest that people will pay them. In December 2017, people paid around $50 in transaction fees. Exchange fees massively exceed Bitcoin transaction fees usually. So when people are buying Bitcoin, they're usually paying a much higher transaction fee for the exchange from which they buy Bitcoin. And in fact, many people buy Bitcoin at much higher cost. Many people buy it from ATMs with premiums for like 5%. Many people buy it from things like local Bitcoin with premiums of 7 or 8 or 10%. So exchange fees massively exceed Bitcoin transaction fees usually. So if demand for Bitcoin continues to grow, transactions will be like international settlement transactions, which currently cost a lot more than Bitcoin transaction fees. Looking at gold transactions, it costs up to 1% of face value to move gold intercontinentally. Bitcoin transaction fees can rise to that level if Bitcoin becomes very big. So really, if demand for Bitcoin exists, the choking point is not going to be transaction fees, because if Bitcoin becomes as big as gold, which is not that unthinkable, it's only another 20x from here or 30x or something like that. If Bitcoin becomes as big as gold, then its transaction fees to move Bitcoin around still can go 50-fold before they come into gold territory, when thinking about the one gold bar. And yet, even then, Bitcoin can scale even more because you're not limited by the bar. You can make much larger batched transactions, and then the price could go up significantly. So I don't see transaction fees as being a limit on the growth of Bitcoin. So in conclusion, the question really is Bitcoin worth it? Functionally speaking, Bitcoin replaces existing technologies for saving and international money transfer. This is really how to think about it. And it's useful to think of the improvements Bitcoin brings to the functions of central banking as technological upgrades. Fiat is a manual technology. It's highly vulnerable to human error and exploitation. Bitcoin is a digital and mechanical, predictable technology with very high reliability. Instead of struggling with an average 14% supply inflation rate of government monies, Bitcoin offers you a fixed supply with a predictable declining supply inflation rate. Instead of a monetary policy run by politicians and special interests, Bitcoin offers perfect predictability and transparency. Instead of financing unaccountable, limitless government spending, Bitcoin finances the development of cheap, reliable energy resources all over the planet. The Bitcoin Standard Podcast is brought to you by Coinkite. Coinkite are my favorite makers of Bitcoin hardware. They produce the legendary Opendime, the first Bitcoin bearer asset, as well as the reliable Coldcard hardware wallet, the excellent stainless steel seed plates for storing your seed phrases, and the block clock. Now, Coinkite have produced the Satscard, a card the size of a credit card which can store Bitcoin and works great as a gift. Coinkite have just produced a limited edition gorgeous Bitcoin Standard Satscard, which carries the Bitcoin Standard logo, and you can get it from coinkite.shop/Bitcoin Standard. Use the code Bitcoin Standard to get 5% off your purchase. This podcast is also brought to you by the Bitcoin Way, your professional Bitcoin IT team offering you personalized, secure, and comprehensive solutions for every step along your Bitcoin journey. The Bitcoin Way offer live concierge service to guide you with your Bitcoin cold storage, running your node, privacy best practices, inheritance planning, corporate strategy, and multi-sig solutions. They don't touch your coins, they guide you through the process of acquiring your coins and securing them. If you'd like to make your setup safer and more reliable, book a consult with them and see what they have to suggest. If you want to give someone the gift of Bitcoin, get them this professional service that will ensure they start off knowing exactly how to manage their coins and not lose them. Go to thebitcoinway.com and start Bitcoining more confidently. Instead of shipping heavy lumps of rock across oceans and melting and recasting them, Bitcoin uses proof of work to ensure far less human labor is involved and far less security risk is incurred. Instead of fomenting violent and vicious power struggles domestically and internationally over control of the monetary system, Bitcoin resolves the validity of its ledger voluntarily with electric power and no violence. Bitcoin cannot end war, but it can significantly dent the state's ability to use inflation to finance war, and perhaps more importantly, it massively reduces the spoils of war by taking the monetary system out of them. And I think it's useful here to think about other kinds of machines, because this is what we're dealing with here. It's just another way of doing machine work. It's another way of using machines to do the work that humans can do less reliably. The washing machine saves humans time on hand washing and delivers us a superior washing experience by consuming electric energy, which people willingly pay for because they value the output more than the cost. The car similarly consumes a lot of energy, but people willingly pay that price to travel faster and safer and to not deal with horse manure. Steel-reinforced houses require power-hungry coal-fired furnaces to produce their steel, but people willingly pay the cost to live in sturdy houses that protect them from the environment. A computer requires far more energy to operate than an abacus, yet computers continue to be purchased in increasing quantities worldwide. Virtually everyone on Earth who has a choice between manual washing and washing machines, between walking long distances and driving, between an abacus and a computer, chooses the more energy-intensive option. This is not rocket science. This is just the basics of technological progress. We continue to find machines that consume more energy to save us on spending our body's energy and, more importantly, on our time. And that's what Bitcoin does. And for that, there's this Twitter thread that I posted before, which I really think is a very good way of explaining this. And it's a parody, essentially, of the arguments against Bitcoin. When people tell you Bitcoin consumes so much electricity, well, yeah, a washing machine consumes so much electricity. An airplane consumes a lot of electricity. A steel factory consumes a lot of electricity. And yet, people continue to prefer the washing machine over hand washing. They continue to prefer crossing the Atlantic with an airplane over crossing the Atlantic with a kayak, even though a kayak consumes a lot less energy. It doesn't burn any fuel. Why do people prefer the airplane over the kayak? It's safer and it's faster. Similarly with the houses, it's much safer to build a house from steel and keep the house alive for 50 years where you can survive in it, protected from the elements, than using a very environmentally friendly, low energy, low footprint tipi. And that's the case with money. And that's why, in this picture, similarly, Bitcoin will never take off because it consumes far more energy than the hand-cranked central bank treasury technology that gives us government money. That's what fiat enthusiasts sound like to me when they say that Bitcoin is consuming so much energy. They'd rather have a central bank and treasury guy get together and meet and decide how much money we all get. And they meet to decide who gets to make money for free and who has to work for money. And they meet and they decide what the interest rate is for everybody in the world. That's the alternative. And that is a primitive technology, like crossing the Atlantic on a kayak, like living in a tipi, like washing with your hands. Yes, it consumes less energy than Bitcoin because it's primitive and really failed technology. It's failed. We have better alternatives to it. That's really what it comes down to. Generating energy and using it to operate faster, better, safer, more precise, and more reliable machinery is the essence of human technological progress and human civilization itself. Electrification has massively improved countless human products, and Bitcoin is just another electric product humans are adopting rapidly. No matter how large its energy consumption, that quantity is only growing because of real-world demand for its services. Objecting to Bitcoin's energy consumption is Luddism, no different from demanding others forsake any useful modern technological product for sentimental, nonsensical reasons. Fortunately for Bitcoin users, the Luddites are powerless to stop Bitcoin from operating. That ultimately is what it comes down to. And that's it for today's lecture. Thank you.